In this video, we are going to discuss about the clubs and society. A question from clubs and society. So this is a recent past paper, 2024 November paper. So here, as per the question, Sports T is a club providing the sports gym facility to its members. The club hires all the sporting equipment. The club also run a small cafe selling foods and refreshment which members and the guests can use. So that is the business or trading activity inside the clubs and society. Okay. So the club's treasurer has provided the following information for the year ended 31st December 2023. These all are the receipts for the club, and these all are the payments for the club. Okay. So and other than this, we have the other payments also, like rent, hiring cost, rights and insurance, purchase of foods and drink for resale, accounting fees, etc. The other part is the balances. This is the opening balances, and these are the closing balances of the clubs and society. Apart from that, additional information, the contract for hiring the sports equipment is 34,800, right? So per annum is paid monthly, right? So that is also given, and rent of the premises is paid for the period from 1st January 2023 to 31st January 2024. So there is a prepayment here, okay, for 1 month. So that also we should be considered while preparing the income statements, right? So the questions, from the questions, there are some requirements here. First one is A. Prepare the cafe's income statement for the year ended 31st December 2023. So this cafe's income statement means that cafe's trading section and the income statement. Okay. So here we know that we should take the items related to the cafe. Okay, so here we know it's only related to cafe. Okay? So we will not consider other activities. Okay, only the items related to the cafe will be taken. Cafe sales. Okay, so the equation will be sales minus cost of the sales, that will be gross profit. Then gross profit minus expenses, and if there is any other income, that will be added. Then you will get net profit. This will be the equation. Okay. So first we'll start with the sales. Sales minus cost of the sales. So what is cost of the sales? Cost of the sales is equal to opening inventory plus net purchases minus closing inventory. So this we need to identify from this question. So we already have cafe sales here. So we'll start with that. Okay. So in the income statement we'll write here sales. It's a revenue. Okay, this is the revenue. The amount is 27,000. So we'll write here 27. This is the 27,000 is the amount for the sales. Okay, then less cost of the sales. So cost of the sales we will deduct here. Cost of sales. Okay, cost of sales. Now write the equation. Opening inventory. Okay, we'll take the opening inventory, we'll check here. Okay, this is the opening balances. See, inventory of food and drink. This is cafe's inventory. Okay, so 1290 is the opening inventory. So we'll write here 1290 in the first column. Then opening inventory plus net purchases. So purchases during the year for cafe, it will be, see here, we can check the payment side. Okay, payment made throughout the year. Purchase of food and drink for resale for cafe. Okay, this is cafe. So 8220 will be the purchases. So I'm taking that also here, 8220. Okay, then what else we have? Less closing inventory. So closing inventory is inventory of food and drink. This is the closing balances. Okay, 31st December, through this you can understand this is a closing, and 1st January means it's opening. Okay, this is closing balances. So it means inventory of food and drink for cafe 1340 should be deducted from this. Then you will get cost of the sales. So I'm writing here 1340. Okay, 1340. So you will get the cost of the sales as 1290 plus 8220 minus 1340. So it will be 8170. Okay, so this is the cost of the sales. Now we'll get net profit. That will be revenue minus cost of sales. So the revenue is 27,000 and cost of the sales is 8170. So that will be revenue minus cost of the sales will be your gross profit. So you'll get here 27,000 minus 8170 will be 18,830. Okay, now other than this we have expenses related to the cafe, right? So here you can see the expenses, cafe assistant wages. Okay, these all are not related to cafe. Okay, so that we will take in the income and expenditure account, right? So items related to cafe, here we are making only the income statement for cafe, a trading business which is inside the club. So cafe assistant wages will be there. Check if there is any other expenses. No, right? There is no items related to cafe. Purchase we already taken, right? So I'm taking that less expenses. As an expenses, I'm taking that expenses. That is wages. Wages for cafe assistant. Okay, cafe assistant. Other wages are related to supervisors and all. Okay, it's not related to cafe, so we won't take it here. So cafe's assistant wages is 14,352. Okay, that should be deducted. So we'll get net profit. The result will be net profit of the cafe. Or you can write profit for the year cafe. Okay, or net profit of cafe. It will be 18,830 minus 14,352. So the result will be 4,478. Okay, it's called net profit. So this is the cafe's income statement for the year ended 31st December 2023. Okay, so the next question is, prepare the subscription account in the book of sports tea club for the year ended 31st December. So this is only a subscription account. Okay, ledger account. So as we know, sports tea club subscription account for the year ended 31st December 2023, and bring down the balances to 1st January 24 next year also. So we know that subscription account is a revenue account. Subscription is the main source of revenue for clubs and society. So revenue is a credit balance account. Okay, credit balance account means it's a revenue. So revenues will show credit balances. Okay, so debit, the added item will be in the credit side and deducted item will be in the debit side. Added item will be in the credit side and deducted will be in the debit side. So we'll check it now. So before going to the question, we should understand two adjustment here. If it is income account, for example, here subscription is an income, there will be two adjustment from accruals and prepayments. First one is accrued is also known as outstanding. Okay, accrued subscription or accrued income. Accrued subscription is a it means accrued income. Okay, accrued subscription is a current asset. Okay, then second one is prepaid or paid in advance. Okay, prepaid subscription, members prepaid for the next year. Okay, that is a current liability for the firm. So this is the very basic things we need to understand for doing this problem. So we know that current asset will show the balance brought down figure will be in the in debit side. Okay, here prepaid subscription, your balance brought down figure means they bringing down the balance figure will be in the for current liability is a credit balance account, so it will be in the credit side. So understand, if the drawdown is in debit side, carry down will be in the opposite side. Okay, for the closing balances. So we need to check here as per the question, what are the information provided here. Okay, which is only related to subscription. Okay, only related to the subscription. Now we'll check the subscription items. See here, the closing and opening balances. Inventory we already took in trading section, the income statement of Cafe, right? So it will not come, and it's not related to subscription also. See here, subscription owing from previous year. So, okay, this is the as I said, this is the opening balances. Okay, subscription owing from the previous year, it means it's accrued. Okay, it's accrued. Right, then here closing balance, you can see the subscription received in advance. So this is the closing we received in advance for the next year. Okay, that is prepaid. This is prepaid income we received for the next year, 2800. As we said, accrued expenses is a current asset, right? Because accrued income is a current asset of the firm, so it will be showing debit balances. Okay, this is the opening balance, so opening figure will be in the debit balances. Okay, in the debit side of the subscription account. Here subscription received in advance, prepaid, that is for the next year. Okay, so it is a prepaid, it's a current liability, so the brought down figure will be in the credit side. It means carried on balance will be in the debit side, So, and apart from this, we have the members subscription fees received during the year also there. Okay, so this much money we received during the year. I think almost all item we took related to the subscription. One more item is there at the last, subscription outstanding. This is the current year, means closing balance. Okay, closing balance year end, we have a subscription outstanding in the current year, that is accrued subscription. So accrued subscription, as we know, accrued subscription is a current assets. So this will be debit balance brought down figure. Okay, it means credit balance, credit side will be carried on. Now we'll check each item. So we'll start with the opening balances. Okay, subscription owing from the previous year, that is accrued. Okay, accrued is a, as I said, accrued is a current asset. It's a current asset. Current asset will show debit balances. So 1520 will be the opening balance of the subscription account. So write in the debit side as balance brought down. Balance brought down 1520. So the date is opening balance, it's on 2020 January 1, isn't it? Next, so we took that one, opening balances. Okay, opening balances done. This is done. Now we are going to the closing balances. Okay, closing balances of the current year. So subscription, there are two items: subscriptions received in advance, subscription accrued also there. Okay, before that we have one item here, member subscription received during the year, received throughout the year. Okay, we received a subscription, that is 1,62,000, isn't it? So we know that subscription is a revenue account, so we will write like either it is bank or cash. So the double entry will be bank account will be debited or cash account will be debited. Subscription is a revenue account, so subscription will be credited. So it means credit side of the subscription account. Okay, we'll write the corresponding entry bank. So in the subscription account we will write here at the year end. Okay, so December 31st we will write here the corresponding entry bank, or we don't know whether it is bank or cash, so I'm writing bank or cash. Okay, that was 162,000. Okay, 162,000. Now we can go to the closing balances. Okay, so closing balances, we have subscription received in advance, that is prepaid. Okay, so prepaid received in advance, as we know, prepaid income is a current liability. Current liability will be credit balance, brought down balance will be in the credit side, that's the meaning. Okay, now, so subscription received in advance, so we'll take this 2800. We know that brought down will be in the credit side, so the carry down will be in the debit side, isn't it? So current year closing balance carry down 2800. Okay, 2800, and we will balance it. After that, we know that since this is a current liability, so brought down will be in the credit side. Balance brought down 2800. Okay, write the date here. It will be same December 31st. Okay, December 31st, year end, but here it will be January 1st 2024, next year. Okay, so that is done. Why it is so? Because it's a prepaid, so it will show it's a current liability, so it will show credit balance, so corresponding so carried on will be in the debit side. That's it. Okay, the next item is subscription outstanding, that is accrued subscription. As we know, accrued subscription is a current asset. Current asset brought down balance will be in the debit side. Okay, so carried on will be in the credit side. So here also year end amount we will write here. Balance carried on is 1280, and as we know it's the current asset, so the balance brought down will be in the debit side. Assets will show debit balance, so 1280. This will be December 31st. This will be January 1st 2024. Okay, now I think we took all items related to this. Now total the two sides 1,60,000. So credit side will be more because it's a subscription account, so credit side will be more. 1,62,000 plus 1,280. This side is more. These two balances are more. So we are taking the highest number here. 1,63,280 in the both the sides. 1,63,280. Then check the balancing figure here. Minus 2,800 and 1,520. So the balance you will transfer to income and expenditure account. Okay, income, it will be transferred to income and expenditure account. This is the balancing figure. Okay, this is the balancing figure. So the amount will be 1,58,960. You know how we got it, this figure minus this as well as this. Okay, so you'll get this is the balancing figure, 1,58,960. This amount will go to your income and expenditure account as a other income. Okay, so this is all about the subscription account. So the next part of the question is income and expenditure account for the year ended 31st December 2023. So here the format is income minus expenses, right? So income, first income will be the profit of the cafe which is there in the cafe's income statement. The profit is 4478. This will be transferred to the income side of the income and expenditure account. Okay, so we will write here profit. So profit from the cafe 4478. Then second income is subscription received, that is the balancing figure of the subscription account, this one. Okay, 1,58,960. or 158,960. Okay, check, is there any other income in our question? This taken, see here, receipts during, this is the income. Okay, income during the year. We have bank interest also, 720. So there is no adjustment for that, so directly you can take to your income statement or income and expenditure account. Okay, bank interest, this is bank interest received. Okay, bank interest received, that's why it is there in the income side, 720. So altogether, while totaling, because we don't have any other income, so altogether we will get 164,158, isn't it? 164,158, it's the total income. Now we can go to the expenditures. Expenditure, we have many expenses here, so go to the question. The bank interest also taken as a income. Okay, see here, this item we already took. Okay, wages, so again we will not take to our income and expenditure. Salaries and wages, sports coaches, administrative expenses, as administrative salary also. So wages is sport coaches is 58,220, and administrative salary is 31,720. There is no adjustment, so directly take that both the wages to the income and expenditures expenses side. Okay, so right here, wages, sports coaches, this 58,220, and administration salaries, 31,720. Okay, right, so we took that both expenses here. So we took this also, already we took cafe assistant wages. Next is rent of the premises. I think rent we have adjustments. Okay, see here, rent of the premises adjustment we have here. The second adjustment, the rent of the premises is paid for the period from 1st January 2023. Our financial year is ending on 31st December. Okay, 31st December. So see here, this is our financial year. It means 1st January to 31st December. 1st January 2023 to 31st December 2023. But this is 12 months. Okay, 12 months. This is the current year. Okay, so but we paid for up to 1st January 2024. It means 1 month extra. This 1 month is prepaid rent. Okay, how we will calculate the prepaid rent? See here, the rent for the premises is 16,250, isn't it? So we paid for 13 months. So each month, how much you will get? 16,250 divided by 13. So you will get each month, right? So 1 month you can deduct it from that, because that is not related to related to this year. So we cannot take it. So we have to deduct it. So 16,250 divided by 13 will be 1,250. This is related to the next year, so we have to deduct it from our rent account. Okay, another way is we can calculate like 16,250 into 1 month extra, right? So 1 by 13. This method also you can do, 16,250 into 1 month prepaid divided by total we took or we paid, that is 13 months. Okay, so those also you will get 1250. So I'm taking rent 16,250 here, and we are doing adjustment also with that. So rent rent is 16,000. So I'm doing in bracket, inside the bracket, 16,250 minus that 1 month prepaid. Okay, prepaid should be deducted from the income statement, isn't it? And this will be treated as, it's a prepaid expenses. So in the SOP it will be treated as a current asset, isn't it? So 1,250, the balance figure will be 15,000, isn't it? 15,000. So rent is over. Now while going to the next part, expenses. Higher cost is 31,900 is there, and here also adjustment is given. Contract for hiring sports equipment is 34,800. So already we have 31,900, again extra 34,000. It means hiring cost total 34,800 is there, so it means additional. So this amount we have to take as an expenses. Okay, so hiring expenses, sports equipment hire, sports equipment hire, extra expenses happened. So total we spent 34,800. Okay, next is rates and insurance. Is there any adjustment for rates and insurance? No, right? So 3,200 for rates and insurance, or rates and insurance is how much? 3,200. Okay, then apart from that, we already took, okay, in the cafe's income statement, so we will not take it here. Okay, we will not take it here. And accountancy fees also 2,400. So these two will be considered as a expenses here. This all we considered, we took it, completed it. Now go to the income statement. Rates and insurance. 3,200. And accountancy fees, 2,400. And total all the expenses now, you will get 1,45,340. Okay, so now revenue minus expenses, you will get surplus. It's not net profit here, it will be surplus for the year. Okay, for the clubs and society, surplus for the year, it will be 164,15. This is 5. Okay, 158 minus 145,340, it will be 18,818. This will be the surplus of the year. Okay, so this is the way to do clubs and society problem. If there is any confusion, you can direct to me. Okay? Thank you.